Okay, welcome to the stream. The chat is working. People that watch on YouTube will be able to hopefully see the text, although I should really change the color from orange because that is horrible to read, but I'll do that next time. But hopefully that will help a little bit. I know it's going to cover up a bit of the screen, which is maybe a little bit annoying for you guys, but hey, it's better than nothing. Just before we start, I have spent the past hour kind of doing stuff, so I haven't been watching the markets too much. I'm kind of surprised by this, actually. The UK seems to have rebounded a bit, and Germany hasn't, which is, oh, it has a little bit, but not as much. What are you Hold on, my girlfriend left her phone in here, and she's just realised that she needs that. Okay, now that she's interrupted everything and ruined the entire stream. Hello everyone. Hello. There's not very many of you today, actually. Only 35 viewers. What's going on? Nobody on Twitch on eToro seems to care today. I guess. I'm gonna head over to the thing. I said that I'd read questions off there first. It's kind of confusing because I don't know which questions people are asking expecting a response on here and which questions people are asking because they want me to answer it on the stream. So, I guess I'll just wait and see. I uploaded a new vlog recently, if you haven't seen it, talking about the halving. It was a bit of a rambling mess. It was 24 minutes long, but, it's not an easy subject to talk about. So let's have a look through these and see what questions I've got. Feel free to ask questions in chat as well if you want. And I might quickly post to Discord again, just say that I'm live. Oops. Oh, never mind. The bot did it for me. That's nice. Thanks, bot. Thoughts on IAG? Okay, well, we'll tackle that in a sec. What do you think about Apple and Microsoft stocks, both near their resistance level from pre-corona? Now I fear COVID's wave 2 comes, also trade war with China. Shouldn't I just quit those two while ahead, says Domkick8. And he's copying me. So, I mean, we're not in Apple, first of all. So don't worry, Domkick. We don't have any exposure to Apple, which is good because on their latest update, things didn't look too rosy for Apple, actually. So I don't think Apple is necessarily something that we really want to be holding at the moment. I'm still super confident in Microsoft, if I'm completely honest. Here are my positions in Microsoft. You can't see it because the chat is over the top. Oh dear. There you go. These are my positions in I'm going to have to address this situation for my next stream, aren't I? So this is how things are looking for our Microsoft positions at the moment. We're profitable in all except one. We're running on 1x leverage. I haven't really set stop losses or take profits on most of them. I mean, I've got some really low ones on here for some reason. I don't remember actually setting those, but basically, I just want to hold Microsoft because they've got nice dividend. They've got nice dividend yields. I mean, not amazing, but pretty good for a tech company with such amazing growth. Their last earnings were pretty good as well, pretty strong. We've got the new consoles coming out towards the end of the year. That will provide a nice boost for them. Microsoft Azure is still doing well. Like, it's the same things I always talk about with Microsoft. I think they're just way better suited for this current environment. The Office products are obviously going to be doing well. Even Windows, to be honest, like even just regular old Windows will be helping us because we get to enjoy all of the sales of new laptops and computers and stuff for people working at home and things like that. So generally, Microsoft just, I can't not have exposure to them, to be honest. I think they are currently the biggest position in my portfolio. But yeah, Apple, not too keen on Apple. I mean, like Apple TV is kind of tempting, but I think it's kind of been drowned out a bit in terms of hype by Disney's launch, even though their product is also pretty underwhelming, if I'm completely honest, probably worse than Apple TVs actually. Yeah, there's not that many reasons to go for Apple at the moment. I mean, they're a good company, and obviously their books are super solid, but they've still got a heavy premium on their price, and I just don't think it's worth it at the moment, to be completely honest, to go with Apple. So sorry, but for now, I plan on keeping Microsoft roughly the same sort of level of exposure, which is just under 10% of the portfolio. I don't think we'll increase it too much from there. Maybe as the prices fall, as the S&P falls down, we might pick up a bit more, and possibly we'll pick up some Apple when we're closer to the bottom of this bear market, which I think we are about to see unfold. But until then, we are staying as we are. Let's go see what other questions there were. I should really not have closed the tab for it, to be honest, should I? How's the audio levels? Everything good? Greetings from Andover. Wow, you're just up the road from me. I'm in Basingstoke. A few train stations away. Okay, here we go. Let's scroll back up. I've answered this guy already. It was kind of an interesting question, though, so actually I'm going to answer it on here. He said, when you open a trade, do you normally have a specific percent of profit in mind? Keep up the good work, planning to increase with you, which is very nice. Rainman456 from Portugal. So I said, surprisingly, I mean, you can read the screen for yourselves, right? But I said, surprisingly, I don't actually really use take profit targets that often. Especially on stocks. For things like the indices and for cryptos, where I use technical analysis a lot more in my decision making, I use take profit targets much more, and you'll see that I actually use regular TPs on my positions more as well. But generally speaking, I don't really like to set targets for companies and try and come up with these strange algorithms to figure out what the value of AMD is, because everything is relative at the end of the day. It depends how the rest of the market is doing. It depends how their competitors are doing. It depends on the mood of their investors and which hedge funds have picked it up, the general state of the economy. Like all of these things play a role, as does TA. So generally what I prefer to do is essentially reassess the situation every week or so. It really depends on the position, and kind of think to myself, is this a good price right now? Like, do I feel happy at this price? Do I feel like this price is overvalued? Do I feel like it's undervalued? My Bitcoin sweater is not on at the moment because it's too hot for that. That's quite thick. This is a really thin little sweater. But yeah, so I think in terms of setting targets, maybe I'm a little bit different to a lot of investors on that front. Especially, I know that most fundamentals-based investors like to come up with their algorithms using price-earnings ratios and all of these sorts of things to figure out a fair value for what they're investing in. But I generally just kind of reassess it every once in a while and think to myself, how's the momentum feeling? Have they made any new announcements? All of this sort of stuff. Are the products being received well? So hopefully, hopefully that's good enough for you. Surprised I wasn't wearing it for the last one. I only break that is a Christmas jumper, guys. I only break that out for special occasions like Christmas. It's like I wear that for the month of December, and then after that it's gone for the rest of the year, tucked away. It's very warm. I would be sweating if I was wearing that right now. It's pretty warm in the UK, but still not quite warm enough for me to just wear a t-shirt most days. What do you think about Viola Environment? It's come down quite much in your portfolio. Are you going to hold it? I'm glad someone noticed this position because I really rate this company very highly. So that was asked by Skoldy from Austria, I believe that flag is. So I do still have some exposure. I've been opening and closing a few little trades here and there over time with Veolia. I just think they're a really safe bet in the current economic environment. I know that these positions, especially, are very drawn down. But if you look at when they were opened, this is before the big collapse happened, right? So, and this is a pretty boring quote unquote stock. So there's no one getting excited about hearing earnings calls about how much waste they've recycled in the past, however long, or a new landfill they're opening up, or whatever it might be. So you don't tend to get quite so much trading activity in stocks like this. It's obviously a French stock as well, but I'm pretty happy with how things are going on it. With these guys, I think, as I said, I think they're just a good safe bet to hold in the portfolio. I'm pretty sure they give us dividends. I can't remember now. I'm sure they do though. Pay out dividends. See if I've got any on these positions, because they've been, there you go. So we've had by looks at 2 dividend payments, because that's an awful lot. It's probably just one, but so they pay out dividends. I'm happy to hold them for a pretty long time. There's not really much to say about them. They're doing research and things on better ways to recycle plastic and stuff, but it's pretty slow, and it's not the kind of thing that's going to actually make a really big impact to the business model and the underlying numbers of the company. But during coronavirus, there's one thing that you can be pretty sure of, and that is that people are still going to want their rubbish to be collected, and that's what these guys do. So they should be relatively unaffected. Their price has been ranging between 18 all the way up to about 20 or so throughout this. But I'm pretty content with where they're at. So I hope that's answered your question, person from Austria, if you are watching, which I hope very much you are. Let's go back to the questions. I will read chat again. I know I always play catch up with the chat. It's like a standard. What am I doing? That guy copied me. Too many notifications. Where's one with a comment? This is with filters on, by the way, to try and stop it from being insane. Here we go. This is probably on the right thread. Yep. You guys think Bitcoin will take a quick dip? Maybe another opportunity to repossession at a better entry point. Yeah, Bitcoin's been having a good time. So here's the question. Bitcoin's been having a good time recently. And by good time, I mean, it's been having fun with everyone and moving around quite a bit all over the place. I'm just going to head over to my screen up here with my Bitcoin chart, and I'm actually on the wrong one at the moment. This is what I used for the video that I recorded. BTC USDT and Binance. Is that what I usually? Yeah, Binance is what I'm using at the moment. So here we go. Here's my chart. We keep pushing up against this. This is reassuring right here, breaking out of this little bit. It's kind of reassuring to see that this trend line hasn't really offered too much resistance, but we are still facing resistance at the level that I currently do not have drawn, which is obviously 10k roughly, maybe a little bit lower. So there you go there. So you can see pretty clearly lots of support was given to the price back here a few months ago, back towards the end of last year. Since then, we've retested it here, we've come back and we've given it a good go recently again, ahead of the halving, and then we had that big drop. I do think that we will probably break above 10k soon, but my general feeling is that we're still going sideways for a while, right? We're not going to be shooting up to 20k anytime in the immediate future. We will get there eventually. I'm pretty confident, but I think we probably have another 4 or 5 months at least of sideways movement, especially when the economy is the way it is. you're going to get decreasing levels of investment into Bitcoin as people start to struggle financially more as the economy kind of contracts a bit. That being said, the stimulus that's happening, printing money, putting it into the economy, that does help Bitcoin. That money has to go somewhere. There's already inflows into the stock markets. That's why we had this insane V-shaped recovery. So I think Bitcoin will move in the right direction in terms of long-term holders and the hodlers eventually, but I think we've got some choppy waters ahead. We'll see. I'm watching it closely. The main thing I'm interested in really on Bitcoin is how it's correlated with the SPX 500, S&P 500, and it does seem like it's moving away from it because the S&P has fallen quite a bit today. It's actually been recovering since the markets opened, but Bitcoin certainly either was an early indicator or it's just gone in the opposite direction, you know. So that's really reassuring to see. Yeah, let's find another question. If you speak of trends in general, you mean most of the US market. Coronavirus is worldwide, but they still are different dynamics, also depending on the sectors. I mean, yeah. You know, like he's referring to my post here, so I don't know if this is really a question for the stream, but the US market really is influential over every other market to some extent. So, you know, when I talk about the market and the economy, I'm basically talking about the US and Europe, but mainly the US though. And you know, when you think about what really differentiates the markets these days, it is basically just you know, the actual local policy. So you know what they're doing in terms of stimulus, what they're doing in terms of you know, jobs and things like that. But the actual companies are essentially, you know, broadly the same types of companies. The US tends to have more tech companies than anywhere else, but so you know that means that they're going to be a bit more resilient, but at the same time, the US has slightly less useful policies around employment and things like that, so it can be a bit more volatile. Because when people get out of work, you know, they don't have the same sorts of systems in place as Europe, for example. But yeah, I mean, it was a bit of a weird question, really. I mean, I don't know how to answer that. It wasn't really a question, so I guess I'll just consider that answered. Started copying you 2 weeks ago, invested again today. Really happy. Any earnings you're looking forward to? Ooh. Well, I did mention 2 in this post, actually. I really need to stop reading chat when I'm trying to answer the questions here. But there are 2 earnings. 2 earnings calls coming up. The first would be Home Depot. That's on the 19th. They're a pretty substantial part of my portfolio at the moment, he says. I actually did buy an extra position in them yesterday, I think. Yeah. And I refreshed one the day before that, so I closed one and then opened it again, basically at roughly the same price, just to kind of refresh it for newer copiers and stuff. Yeah, Home Depot is still one of my biggest positions, along with Microsoft. Pretty happy with how that's looking. So, questions, more questions. I've run out of drink. Luckily, I knew that this was going to happen, and I prepared with another beverage of some watermelon and strawberry flavored tango, which is probably my favorite soft drink at the moment. Just to chill it a little bit. Find where we were. Added more funds after riding Bitcoin for a few weeks. Keep up the great work. Thanks, Andy, if you're watching, Andy James. Thanks for outstanding work. Blah, blah, blah. Keep it up. Thank you. I will try. That is my goal. Started copy because of one reason. You're making almost only profit the whole time. Impressive. Well, it's not always like that, so you calm down there and prepare for the worst, Matt. I'm not going to try and pronounce that. But yeah, prepare for the worst, and then you won't be too disappointed when I only drop a little bit. That's my thinking, at least. And that's why I tell people to set their stop losses, at the kind of levels that you generally see my yearly drawdown hit. So, your stop loss should be at like 40% or something generally, unless you really can't afford to lose that money. Just have one question left for you. Hopefully you can answer it. Are you going to short the markets too if you think it's going down? Or are you only hunting after uptrends? The answer, my Norwegian friend, is that obviously I am shorting the markets. I'm shorting the markets right now, in fact, with a reasonable chunk of my portfolio. So I've got some positions shorting the SPX. These are using a mixture of 2 and 5 times leverage. So I've got 3 5 times and 2 2 times currently. Most of those are still in profit. I'm also shorting the German markets, the DAX. A couple of positions there. I have a couple in the UK 100, the FTSE 100, or I did. I'm not sure where they've gone. Here they are. A couple of positions in the FTSE at the moment. They were green earlier, both of them pretty comfortably, but evidently things have moved against us a bit during the day. I'm not too convinced that this is going to last that long, though. You've got to be cautious when you're shorting in markets like these. You really do. And obviously we have my IWM positions, which is the Russell 2000, because they don't have a Russell 2000 proper index on here, which is a shame, because if they did, I would probably trade that and use leverage, but they don't, so I just have lots of these positions instead, as you can see, and they're doing okay. The purpose of these positions, right, is when the goal when the market isn't going down isn't to make loads and loads and loads of money. The goal is to stop the bleeding, right? And essentially, the hedge works in 2 ways, right? We have these short positions that we can take profit on when we think we're getting towards the bottom of the market, and then we can go and reinvest that in some long positions, which hopefully, again, as I said, would be towards the bottom of the market, and then we're ready to ride full force on the way back up. It never works quite that smoothly, but that's kind of the objective. The other thing is that it just dampens the effect of things. It does also dampen the effect when we're going up, like today, now that the markets are going up, those short positions are really holding us back and holding the portfolio back from making more money for us. But, at the same time, they're our insurance policy, right? They're what ensures that when we go down, we don't just drop by 3% in a day. It's kind of controlling volatility as well. So it performs quite a few functions having these different short positions. It's important to have it in different markets as well. Bad mod, yes. Very, very bad. You're fired, Chris. Wait, no, you're not fired. So it performs quite a lot of different functions. Like there's all sorts of much more complex ways of doing hedging as well. We have positions in TLT, we have gold, we have IEF. We've got high dividend yield ETF here as well. Some silver, another bond, Vanguard bonds. We have. We've got quite a big selection actually at the moment. I've also got some short positions on individual stocks. So you can see here shorting SIX. This is a car rental company. They had their earnings a couple of days ago. They've not been doing too well. I've made some reasonable money shorting them before. I've also got shorts on Expedia, shorts on TripAdvisor. So it's we're running a long short portfolio at the moment for sure. And you can really kind of see that by how the portfolio is performing, in that it's not really actually moving by that much. If I check the news feed, you can't see it because the chat's in the way again. Good job, Jay. Hide the chat. So 0.5% in the green today. We lost about that yesterday. So really the portfolio is actually sitting pretty stable at the moment, even though the markets are kind of, doing the wave and going a bit mad. So that's how things are looking at the moment. I'll try and get back to the questions. Okay. But welcome to the copy group, to the gang. Matthias, or Mathies. I don't know how you pronounce that. I'm not even going to try and do it. Planning to add funds, will you restructure your positions? I actually replied to him because I do plan on making a substantial deposit to my eToro next month. So this is not something that I normally do, but you will probably see in a few months' time, eToro is looking to slightly modify the rules on popular investors. And that means that some popular investors will have to add more funds to their accounts, specifically the ones right near the top, but generally across the board, a lot of popular investors will have to add a bit more funds to their accounts if they're managing over a certain amount of money. I will be doing that, so I'll probably be depositing another $15,000 or so next month to my account, which is around about 20 to 25%. So if you are thinking of adding funds and you can't afford to do that much, then start saving, get as close to it as you can, and do it when I do it, because it will keep you in sync with the copy better. If you can't afford to add any funds, don't worry, you don't have to add funds, but it might be worth you stopping your copy and recopying when I do that. I will make numerous posts about it before I do it and explain everything. I'll write a blog post and kind of go through everything. No, the chat is not appearing on eToro. I'm essentially going through questions that are asked on eToro first, and then I'll kind of catch up with the chat. But yeah, that's the goal, right? Is basically I need to add some funds to my account. I've actually wanted to add funds to my account for a long time anyway. I did speak to eToro a lot and try and figure out a way of doing it that wouldn't cause too much disruption to copiers, because essentially if you don't add funds at the same time, it will desync your copy, and that gives you a few choices, right? Like you can either add funds and sync it back up again at the same sort of time, or you can not add funds and just take the hit and understand that some new positions won't be copied very well. And I will try and modify my trading style a little bit for a while to try and help people that do decide to take that approach. But I would encourage people to stop copying and start copying again at the point when I've added funds, if they aren't able to add any funds at that time. So I hope that makes sense. I know that is a lot to take in, but I will explain it all. You don't need to worry about it right now. I will explain it all properly in a blog post, in a YouTube video, in numerous posts on eToro, give everyone lots of warning. But if you're thinking about adding funds, it might be worth holding off until next month, basically, because that will be the best time to do it automatically in line with what I'm doing. Oh, that was a lot to explain. It's going to be really fun explaining that when it actually happens. Yeah. Yeah, so that was that question. Someone's shilling some random crypto that I don't care about. I mean, maybe I'll look at it at some point, but I'm not going to look at it now. Really great to learn you're doing risk management in your portfolio. Do you prefer to use big leverage or increase capital positions? Hedging. Kind of a mixture of both. I mean, you pay less fees if you don't use leverage. So, there is that. But yeah, I think I'm kind of a mixed approach. I like to keep some funds free, and if I'm using leverage, then that allows me to do that much more than if I don't use any leverage. But I prefer to keep leverage pretty low. Do we get dividends while copying you? I did answer this guy. You do indeed get dividends when you're copying me. I gave an example earlier. If I head over here and head to those positions in Veolia, the ones that we've had open for a while. So these were opened back in February. Since then, they've paid out dividends. You can see down here it says refunds of $5.20. Yeah, that's essentially the dividend that we got. So that's over 10% dividends, which means probably 2 dividend payments in there. because nobody pays out like 10% dividends. That's insane. Wait, no, it's not 10%, 1%. Okay, yeah, it is one dividend. I'm wrong. Ignore me, bad at maths. I don't know why I do this job. Apparently I can't do any maths at all. I'm just kidding. Yeah, so yeah, dividends, they do happen. We do collect them on eToro. If you have positions with 1x leverage, you get the dividends for it, and they go straight into your eToro available balance for me. And because you're copying me, that means it goes into your copy of me, and it stays within the copy of me until the copy is closed. This guy is waving. I like that. Big fan of the old wave emoji. You're the best. Wow, that's some strong words, but I'll accept it. Thanks for my time. I'll accept that as well. Classic. Oh, chat's having a good old wave as well. Oh. This guy thinks my name is James. He is mistaken though. Wondering if you had any recommendations for books in terms of learning the basics of advanced trading economics analysis for someone that may be looking to become a trader. So there is a book that I've got that I haven't read yet in my Audible. Let's see what it is, because I can't remember what it's called off the top of my head. I haven't read it yet, but I've heard very, very good reviews. It's mainly focused on fundamental style of investing. It's called Invested, and it's by like a father and daughter, and like the dad was a trader, and the daughter's learning to become a trader from the dad. And so it's kind of like almost like a diary of them like learning how to invest and stuff, and the techniques that their dad uses. But it's all about fundamental analysis. Yeah, it's by Danielle and Phil Town. If you want a book, that's one that I would recommend without even having read it. I personally prefer books more on like politics, ideology, stuff like that. I've read a lot of books about things like universal basic income and open borders policies and all of these sorts of things, and broader economics. I think if I were to recommend one book to everyone, regardless of what your interest is, because it's just a fantastic book, it would be *Sapiens* by Noah Yuval Harari, I think his name is, something like that. He's like an Israeli historian guy, super smart, amazing book. Everyone should read it. Yeah, get that book. I don't actually read books. I listen to books on Audible. That's all I do. So, yeah, that's my approach to it. Next question. Next question. Close Audible, Jay. You don't need that open. Yeah, I might actually reply to this. Well, no, I'll leave him. He should be. Watch the stream, Mick, if you want to know your answer. Homo Deus, that's in my library as well. That's essentially the sequel to that book, as someone in chat has just pointed out. That's also a great book. I did start listening to that, but I haven't really got very far yet. So, thank you for the updates. Helped me out a lot. So this guy's talking about the fibs, I assume, on the S&P. I can't really be bothered to go and look at that. We've got plenty of other questions to go through. This guy also thinks my name is James. He is also incorrect. My name is Jay. At least it's not Jane. Oh dear. What about 3M? It has been low, right? I think 3M has overcome its wave of hype of everyone buying it because they make masks. In reality, 3M do an awful lot of things, not just masks. They make everything from duct tape to I don't know, other things, super glue. Those two things are really similar examples. But 3M make an awful lot of things. So, and I think they got massively hyped up because they are the people that make filters for masks. Probably the biggest in the world. So everyone was going bananas about them because of that. There was obviously a lot of drama between them and Trump in the US because he was stopping them from exporting masks they were making for people who've already paid for them in other countries long in advance, and he was confiscating them and taking them back to the US and telling people during his live updates on coronavirus that 3M is a terrible company, and all of this nonsense was going on, completely crazy. But importantly, 3M is just a good company. They make a lot of things that are very useful for a lot of people, including those masks. I invested in them long before coronavirus really became a big problem. They were part of my pick based on their dividends and on the strength of their books as a value investment. So yeah, it's drawn down a little bit at the moment if I go and find it in my portfolio. We have a little bit of exposure here, and it's negative 14% or so overall. But I'm still pretty happy with it. I still think they're a great company to hold on to during this entire crisis. They ramped up all of their facilities to make masks, pretty much. For the most part, anywhere that can make masks is making masks, because there is still huge demand even now. But yeah, just a decent company. Is it worth picking some up if you don't have some? Maybe. It depends on your strategy. At the end of the day, I'm not really here to advise on everyone else's investments. I'm here to look after this portfolio. And for me, I think my current level of exposure is about right. I don't plan on adding anything. I don't plan on removing anything. I'm just going to hold on to it. So that's what I'm thinking in terms of 3M. Thoughts on the coming months? Quoting from my post above, are you sure about that though? Because it will only be for 13/14. Then the feds will take control. Mark my words, Jimmy. Not really sure what he's talking about there. I mean, I assume he's talking about this little bear move that we've seen today, saying that he doesn't think it's going to last and it's only going to last yesterday and today. I mean, it could do. We've bounced off the moving average on the S&P. I'll show you the chart. Why not? Here's the S&P. Where are we? It's full screen. We're on an hourly chart at the moment. You can see that we essentially have bounced off this average. Yeah, we dropped a little bit below it, more towards this Fibonacci level. But, at the end of the day, yeah, it's going to be a bumpy ride down, right? It's not going to be smooth, but we've seen a double top here. Like, that's a pretty clear double top. It could even be a really ugly looking head and shoulders forming. But the point is, we've dropped below all of these three levels now on the hour. This is the 4-hour chart, not the hourly. Sorry, my bad. We've dropped below all three of these moving averages on the 4-hour. On the daily, we've dropped below two of them, and we're heading for the third, which is just below here. On the hourly, again, we've fallen below all of them. The weekly, again, we're still below two of them. Like, I just don't think it looks great. The RSI is on side here, but the RSI, parabolic SAR, is on side. But as I've said numerous times before, parabolic SAR is not great on high time frames. I much prefer it on lower time frames. On the daily, you can see it's turned bearish. On the 4-hour, it will be bearish. On the 1-hour, it's probably bearish. Still bearish on the 1-hour, but it might hit soon. That could be interesting, actually. That could be a nice play, potentially. Half an hour, it's bearish. 15-minute is bullish. So, there you go. But that's just like super quickly looking at it. But I mean, there's obviously going to be a lot of support to try and stop it from falling below this price. But at the end of the day, governments have done a lot of what they can do. Part of the reason that this is bouncing is the RSI and the hourly as well. Even here, RSI is at support. But I'm pretty confident that this is going to keep going. It may, be slow, and we may basically bounce tomorrow and close the market a little bit up tomorrow again. But next week, I think it will be more of the same, right? We're going to have these slow, gradual falls through the market, especially since earnings season is essentially over now. And, if earnings season is over, then what is there to look forward to be honest? There's a famous phrase in trading, which is sell in May and go away. And it's this kind of notion that all of the big moves to the upside in stock markets happen basically throughout winter in Q4 and Q1. So people generally sell in May and go away, and then they come back in about September to buy back up again and open their positions again. And I think that there is some truth to that. I think I mentioned it in one of my vlogs very briefly that I think that this, and I definitely tweeted about it, that this year may well be the year that that phrase kind of comes into its own a bit. The economic data doesn't look good. The jobs numbers don't look good. At some point, the proverbial shit is going to hit the proverbial fan. There's no two ways about it, right? Like, the economy is not in a good place, and we still don't know if there's going to be a second wave. If there is a second wave in the nations that have started to open up, the ones with big infections, I mean, so not New Zealand or Australia, but Germany, France, the UK. If there is a second wave, then that will really be pretty bad news, and you will see that play out on the markets very quickly if that actually happens. We don't know if it will, but it might. So yeah, I'm afraid I do disagree with you a little bit there, Project Achilles. Hey, Jaynemesis, good job so far. Copied you 100% of my volume. I believe he means equity, because I trust you and like your overall approach. Might be interested in Tomra Systems. OL. What's OL? Oslo? Is that the Oslo Stock Exchange? Is that? I don't know. OL. What's OL? Being what they are, I don't see them going down in the long run. What are they? Tom.ol. Huh. Sorting systems. So it's like a logistics solution company. Vending systems. Not really my thing. I don't know if they're going to do that well, to be honest. I mean, I don't know. Our company's really going to be looking to upgrade their automation and stuff at the moment. I don't know. It's not really my area of expertise. I appreciate the suggestion, but that's probably not something that I'm even really going to bother researching based on just reading about what the company is. It's just not really something that I care about. And if you don't care about it, then you're not going to be bothered to listen to earnings calls and keep up with it and read the news about it. It's hard to get excited about something like that, really. Where did my Ford trades go? I closed them out of sheer panic, Luther. Sheer panic. It wasn't really sheer panic, but I did close them. I do still really believe in Ford, but I closed them because the market was turning again. And it's frustrating because they were actually sitting in a pretty nice profit, and I could have taken profit if I'd set some good stop losses, maybe. But hey ho, these things happen. Questions. Yeah, so have had a look at that. It's not really for me, CoinGin, but thanks for the suggestion regardless. Would you enter on HD or Nvidia or Walmart on Monday because of good earnings? I mean, I'm already in the positions that I'm happy with. I have very light exposure to Nvidia, although again, I'm kind of tempted to add more, but AMD's earnings were not fantastic. If I'm completely honest, and I'm an AMD, big AMD fan, so it says it should tell you quite a lot that I'm quite middling on my outlook for AMD currently. I will definitely be picking up more AMD towards the end of the year ahead of the console release. But yeah, the semis don't seem to be doing that well at the moment. I think they had their little growth spurt. Maybe Nvidia can do something, but I think probably we won't really see much out of them. In terms of Home Depot, very bullish on them. You know, that's why they make up such a big part of my portfolio. Do I think they're gonna do super well during earnings? Probably not. I think their price is back down a little bit now off the highs of where's it gone? There we go. Yeah, back down off the highs a little bit, from like 240 or so where it was trading a few days ago. Yeah, if you don't have any, I've got positions at worse opens than you could get if you bought a position now. So by all means, if you want to get involved, then get involved. I think they're a solid company. They have great dividend yields, healthy financials. It's a sector that should be largely unaffected by it. There's a lot of people during coronavirus that have been doing DIY projects at home. Builders in countries like the UK and probably the US, I haven't actually checked, are the kind of things that people allow to work because their job is outside for a large amount of their work and things like that. So they're going to be getting their supplies there. It's very hard for them to be disrupted by someone like Amazon for the most part, because yes, you can buy your drills and your saws and whatever else on Amazon if you really want to. But if you go via somewhere like Home Depot, then obviously you get like the better pricing from being part of the trade, and you get obviously things like wood and actual proper building materials and things like that. You can't really get sheets of plywood delivered through Amazon. It's just not something that's really logistically compatible with the other things that Amazon sells. It's just too big and bulky and weird. Whereas Home Depot are kind of specialized on that sort of stuff, so pretty hard to disrupt. There's a lot of good reasons to be invested in Home Depot, but that's essentially why I like them. I don't know what I'm expecting from their earnings, really. Probably they will do slightly better than the estimates, but guidance is always the big question mark, really, isn't it? And at the end of the day, there are potential impacts down the road for the housing market and things like that, which would in turn have an impact on Home Depot. So, what I'm really doing here is not giving you a clear answer. I'm holding my positions, put it that way. I'm going to hold on to what I've got. Hopefully you guys aren't just adding loads of questions to this. There are a few. But we're getting through them. We're almost at the point where I play the game of attempting to catch up with what's going on in chat. Recently started copying you. If I want to compare your portfolio performance against the market index, then which market index should I see? That is a tough question. I would probably say the NASDAQ. I think the NASDAQ is going to be the most fair because I trade mainly tech stocks, although not all tech stocks, which would be, and the NASDAQ would be the benchmark for that. But I do also trade some crypto. But my crypto trading has been pretty low, so I think a comparison against Bitcoin would be pretty unfair. I would say, either the S&P 500 or the NASDAQ is what you should probably look at. Chewin is posting. I finally posted the video for you, Chewin. It was your tweet that made me do it. I was like, oh, fine. You shamed me into it. Yeah, so yeah, probably the NASDAQ I think is the fairest comparison. I mean, I'm pretty sure that apart from 2018, I would have beaten the NASDAQ every year. I think maybe 2013 when I first joined as well. But apart from that, I think I've beaten it every year. I've definitely beaten the S&P every year apart from those 2 years. So, take that as you will. I've never really outperformed Bitcoin apart from 2018 and 2013, I suppose. But, that's just the way of these things. It's hard to find a good comparison for me, really. That's really, really fair to look at. Which utilities? I mean, actually, to be honest, if you really want to find something good to compare to, then look at hedge funds. To be honest, you know, yeah, compare me to some of the leading hedge funds, and there you go. That'll give you something that might be a bit fairer to compare to. Which utilities do you use for depth charts? I notice you're using TradingView. Which of their offerings do you find most useful, or do you use more than one? For depth charts, I'm a bit confused by this. Depth charts? You mean market depth? Do you mean order books? Because I don't really look at order books. I used to look at order books for cryptos, but I don't really look at order books. I'm maybe you just mean charting generally, in which case, yeah, I use TradingView. I have TradingView Pro Plus, I think it's called. Let's see if I can figure it out. No, trading. I just open TradingView, please. I don't know why it didn't just go to tradingview.com when I typed that, but here we go. Pro Plus, yeah, I'm on Pro Plus. Probably, you know what, it probably says that up in the corner, doesn't it? Somewhere. Okay, no, it doesn't. I feel validated in looking elsewhere. Yeah, so I use TradingView. In terms of indicators, which maybe is that's what you mean, I've kind of gone through it a bit. I actually made a video recently about the parabolic SAR, but apart from that, I use mainly moving averages, Fibonacci's, support resistance levels, the RSI, and volume by price range. Those are the main things I use. Already have the minimum amount $200 copying you. Is now a good time to put more money in? Well, Amir, listen to my answer that I gave earlier on. I will be adding funds soon, and especially if you're only in at $200, that suggests to me that you probably don't have money growing on trees. And in that case, it is a good idea to wait and do it at the same time. My girlfriend has subscribed to me on Twitch. Woohoo! Thanks, Leanne. I should come up with one of those little animation things on the screen like everyone else does, but I don't have any. Sorry. Really, that's kind of like just getting a refund on the Twitch Prime that I pay for. I get like a little bit of a refund, a little bit of a kickback. Hi Jay, important question. Miss G is going to use the DCA approach, discounted cash flow approach. He will add dollar cost averaging. I thought it was discounted cash flow modeling, which is like a way of valuing stocks. But no, that makes much more sense. Dollar cost averaging. He will add money monthly, a small amount starting with 4%. Is that what you have in mind as well? I'm talking this out of discussions we had on Discord group. In George's Discord. I'll probably just add it in one go. I don't think disrupting my copies that many times is a good thing to do, personally. I can understand why George is doing it that way, but I think personally, I think it's less just disruption to copiers to just ask them to do it once and doing everything once than doing it gradually over time. In some ways, it is better for copiers to do it the way George is doing it. Like, if you're a copier and you decide not to add funds, then doing it that way definitely would work out better. I don't know. There's pros and cons for both ways of doing it, but I think I'm just going to add funds in one batch and ask my copiers to do the same if they can, and if they can't, then I'll ask them to uncopy and start copying again, because honestly, the amount you'll lose to spreads is pretty negligible, really, in the grand scheme of things. So even for those people, it really won't hurt them very much at all. You're talking about maybe like 0.5% or something of profit that it would cost them to do that. Yeah, so that's how I'm going to do it. But yeah, I mean, his approach is pretty valid as well. But yeah, I just think it's with the numbers of copies I have and how passive a lot of copiers are, I just think it's easier to do it this way. I do like this lady. She comments quite often. She's French. She's always getting involved in my feed and asking how things are going and what the plan is. But this time she's just said that I'm doing well. So thanks, ad ad team Esther. I don't know how you say your name. I'm sorry. Chun. Oh, she's just done it again. Maybe she's watching. Oh, she was replying to this person. Ah, cool. How many trades do you do on average in a day? Oh, well, at the moment, more than normal. To be honest, I think I counted, and this yesterday alone, I did 21 trades. Yesterday was a pretty busy day, but that's a lot of trades. Yeah, that's a lot of trades for one day. That's how many I closed, at least. I mean, didn't necessarily open that many, but yeah, at the moment, I would say that I'm doing a minimum of 50 a week. I think I generally do about 1,000 to 1,500 per year trades. So that's a lot. If you divide that into days, that's like three trades a day, maybe more. So yeah, take from that what you will, really. I have a long-term approach, but I try and trade actively and manage things pretty actively. So yeah, there's quite a lot of trades. I honestly, I think probably I do more trades than a lot of day traders do. So yeah. Let's see what Chuan wants. What do you want, Chuan? Currently watching your stream. Hi. Oh no, the pressure is on. Two questions for you. Do you hold most of your savings on eToro? And if you would have to copy one person on eToro, who would it be? Wow. Oh, that is a brutal question. I'm going to upset all of the other popular investors with my answer, I'm sure. Okay, so the first question. No, I do not keep all of my savings on eToro. I think that would be somewhat reckless, if I'm completely honest. Nobody should keep all of their savings in any one thing. Unless they've got very little savings. And even then, I would say, try and diversify. The amount that I have on eToro is in total as part of my net wealth. It's well below, well below 10% probably. I mean, I'd have to actually do proper maths to figure it out, but yeah, in fact, it's way below 10% now that I think about it. But yeah, so no, I don't keep it all on there. I'm obviously not going to tell you exactly how much percentage-wise it is, because then you'd all know how rich or not rich I am, and that would be painting a big target on my back. Since I am streaming live to the public right now, talking about how much money I may or may not have. But yeah, it's not everything I have. I have some cryptos that I have outside of eToro. eToro is the only place I have stocks and shares currently, although I may get a stocks and shares ISA somewhere else potentially. Honestly, eToro, if you're watching, Sam or anyone else, I would love it if eToro added a stocks and shares ISA functionality, or even self-investment in the UK, a SIP, because it would just make my life so much easier. Like, I trade here actively, and I would very much like it if I could benefit from the tax benefits of that. But that's a very UK specific thing. So yeah, and then obviously, I have my house and I have a bunch of money in the banks, and all of these other silly things here and there, even some slightly weirder investments potentially. In fact, I have some investments in Africa, even helping Africa get some solar power. So that's pretty cool. I quite like that. Feels good. Yeah, but not all of my money is in her. Question number 2: who would I copy? Oh, that's difficult. Why would you do this? One person. Unbelievable. I'm not going to chicken out though. I'm going to give you one person. I'm gonna go on here. I'm going to remove everyone. remove all the filters, I mean not remove everyone. And I'm going to tell you who I rate highest currently. I'll tell you what I'm going to do. I'm going to give a couple of honourable mentions because I think it would be really rude not to. First honourable mention is going to go to Wesley. Wesley has been pretty solid and deserves a lot more copiers than he has. He is really intelligent guy. His background is in startups. I have no idea how he does such a demanding job at the same time as eToro, but he somehow does. His performance this year is not amazing, but he's beating the markets pretty tidily. So yeah, Wesley is my first honourable mention. He's well worth a copy. Another honourable mention, Good Going. Good Going is the most controversial person on eToro. Everyone asks him about why he lost the entirety of his account in these 2 years, and I'm sure that he will tell you if you go and ask him that he was just playing around and wasn't taking eToro seriously back then. But he's also a smart guy and a good trader. And again, like, is worth a look. But my actual choice, and I guess, I'll give an honourable mention to George. George doesn't need any honourable mentions. He's doing brilliantly recently, as you can see from his stats. But I'll give him one anyway. Honestly, I'm friends with quite a few of the popular investors, like Olivia and some of the others. But you're all going to be very surprised with my pick for who the one person I would copy right now is, because it is someone that hasn't been on eToro for that long, and that is Slow and Steady. Slow and Steady. I looked at his portfolio and I was impressed because this is a reasonably complex portfolio to construct in terms of like hedging. And when you actually look at his chart and his performance, his drawdowns are tiny and his consistency is fantastic. He's had 2 months where he's made a loss. He hasn't made a loss in May yet, so it's a bit early to call that one. But he is essentially the kind of trader that I see competing with Olivia Danville, but with slightly more profit maybe than Olivia Danville. Obviously, the way he's ridden this out has been pretty impressive, and then to obviously still return decent returns last year as well. Yeah, I'm impressed with him so far. I know it's really early to call it on someone who's a red star popular investor, but I think he's good, to be honest. if you read his bio and stuff as well, and read his posts that he puts out, he just comes across as someone that's very intelligent and experienced. So I think, I think if you haven't got him in your portfolio and you're looking for someone to add, he may be well worth looking at. That's my 2 cents, and I know that is a controversial answer that nobody is expecting, probably least of all him. But hey, hopefully it will get him a few more copiers. I think that was all the questions I had, so I can finally read the chat. This is record time for me. That's only been 1 hour. It's going to be Green Star tomorrow after my mention. Maybe. I believe they don't update it on a daily basis, though. Or when you become a Green Star, you have to have been at the level before for like 2 months or something first. Another honourable mention actually while I'm here, just because I just saw his name. Ray Verhey is also pretty top tier trader, I think. Again, it's a bit early. Like that with a few of these guys, they've only really been on the website for a year or so. So take it with a pinch of salt. Don't put everything into them, but I think he looks like he could be a good trader too. 99 things. My portfolio is incredibly stable today. I am basically, I'm pretty close to a 50-50 hedge, to be fair. So, a couple more questions. I think I saw you in the chat though. Zevi6200. Yeah, I did see you in the chat. Toe in the water. Thoughts on renewable stocks? Wind keep winning large contracts. Saudi Arabia installed record-sized solar farms, etc. Does the US artificially propping up oil suppress renewables? You know what? I'm going to answer this question because I like this question. I like this question because, man, renewables are good at the moment. The US just surpassed like 45 days or something without using coal, which is insane. Renewables there are growing by something like 11 or 12% a year, which is fantastic, even though hydro is actually shrinking, because hydropower, interestingly, is being affected by droughts. Who knew? Who knew that climate change might come back to bite us? But no, on the renewables front, I think actually we're going to see a lot of investment in wind and solar and batteries, especially. There's a lot going on in battery tech at the moment, and like flow. You can look at flow batteries or some of the research that's going on into hydrogen batteries, or the research that's going on into new solid state batteries. There's a lot going on in the space. The cost of lithium ion batteries fell by 85%. Over the past decade or so, I think. It might be over the past 5 years, I can't remember. But 85%, it's on a very similar trajectory to solar. And obviously that is what we really need if we want to shift towards using more wind and solar. Ørsted, as they're actually pronounced. I always call them Ørsted because I'm English and I can't pronounce the weird vowels that the Scandinavian countries have, but they are installing some of their biggest offshore wind farms at the moment around the UK and a few other countries. They've been doing well. They're a large-ish chunk of my portfolio. I actually added a little bit to them recently, as you can see, these two positions over the past couple of days. Because I just kind of went and did a bit more digging on them. I'm really a big fan of this company, really big fan. And I think those are the kind of companies that are going to benefit. Like you have to look at this in terms of really digging down into the companies that are actually in this sector, right? Investing just blanket in renewable energy could actually hurt you quite a bit this year, I think, because of the impacts on the economy. But if you make sure that you're investing in companies that are doing the big stuff, grid scale solutions, so Tesla with their batteries, for example, everyone's talking about Tesla in their cars, but the battery side of it, the grid storage battery solutions that they have are picking up steam, and I think that they will turn into a big part of that company over the coming couple of years. So Tesla is worth considering for that, but at the moment I don't hold any Tesla because Elon is being an idiot, and so I'm protesting against him. And also the price is a bit high, so but yeah, Tesla's worth watching because of that. In terms of solar, I think the safest bet in solar is probably SolarEdge and Enphase because, inverters are just needed no matter what your project is. So it doesn't matter if it's solar panels on a house or solar panels in a nice big farm in the middle of the countryside. You're probably going to be using some inverters, and they're probably going to be made by one of those two companies. So those are some pretty safe bets. In terms of stuff like the actual producers, I think there's some risk there. Companies like SunPower, a bit more risky. Trig L is another one that I really like. The Renewables Infrastructure Group in London. They have about 5 employees. They have almost no overheads. All they do is buy and then look after solar farms and renewable energy farms. It's not just solar farms; they do other things as well. But yeah, that's one that's a really nice pickup if you want something stable. You probably won't make huge returns on it, but good for weathering a dangerous market. So I've got them as well. Yeah, but I could talk about renewables for quite a long time because I'm reasonably passionate about the subject, I would say. Trying to think of what else stands out. I mean, I have a position in Zinni Solar as well. I actually closed a trade yesterday for about 30% profit or so. Yeah, here. Okay, it was 20% profit in Zinni, but that's more risky. Chinese company. There's a lot of risk that comes with that. yeah, that should just about satisfy you for your question, I think. I'm going to go back and scroll up through the chat, see what's going on. Pete's asked, I have some positions in XRP with an average of 0.35. Do you think it will hit that soon? No, I don't. I think you're probably better off with Bitcoin. I'm going to head up here to my charts, and I'm going to take down this Bitcoin one, and I'm going to bring up the Bitcoin market cap dominance, calculated by TradingView, as you can see, which probably means using CoinMarketCap. Oh, that's the wrong button. I always do that for some reason. I always hit the maximize button at the top instead of at the bottom. So yeah, you can see Bitcoin actually is fighting resistance level here, trying to break out again against the altcoins. So I think it's a pretty sketchy time to be in altcoins at the moment. I could see Bitcoin heading back up to this level again, up to 70% market dominance. Yeah, that's kind of what I think, to be honest. I would be a bit cautious. XRP specifically, I still think Ripple Labs are doing the holders of that coin absolutely zero favors, to be honest. I think it's almost criminal, to be honest. Like they're sitting there paying themselves these huge salaries, printing new coins whenever they want to give to their buddies, and to try and lure people into the ecosystem. There's still some problems around centralization besides just the tokens and token distribution, but really the token distribution is the main thing. And I don't know. I just don't buy it. I don't think the incentive structure is really very good there at the moment. So I don't hold any at the moment. It's not that I really have anything specific against XRP as a technology. I think the token is decent. It's up there. It performs pretty well. It's fast. It's pretty scalable at layer 1 without requiring layer 2 technologies. But I think the team let it down. And we'll see. At the end of the day, there are more banks that seem to be willing to work with Bitcoin than there are banks that are willing to work with XRP at the moment. So you take that as you will, I guess. But I wouldn't. I only trade XRP in the short term currently, and I have very limited exposure to altcoins. Reading chat, just trying to catch up. Hypothetically, you in 8% profit on Bitcoin trades that you've opened for about 2 years now finally come to the realization that you are muppet and you are stupid trying to trade crypto yourself. Do you close the trades right now? So I'm assuming this guy doesn't like me trading crypto. At the end of the day, crypto is... I don't trade crypto to try and outperform Bitcoin, right? If I was going to do that, I would not be on eToro. I'd probably be somewhere else making an awful lot of money from a paid group or something, or from one of the funds that would pay for a trader that does that. I'm not a technical analysis trader, right? And Bitcoin responds to TA much more than it does to fundamentals. The reason that I trade Bitcoin and have Bitcoin in my portfolio is because I want exposure to it for my copiers, right? I want my copiers to have exposure to it. And I could allow my copiers to just go and buy and hold some Bitcoin, but I do think that I do a good job at stabilizing the impact of Bitcoin's kind of choppiness, if you will. So yeah, my goal isn't to outperform Bitcoin, right? I don't think I've ever really outperformed Bitcoin. I came pretty close to I think I might have outperformed it in 2017, to be fair. In fact, I'm pretty confident that I did outperform it in 2017. Given that half my portfolio was exposed to it roughly in 2017, and I made more than half the profit of it. But that's kind of besides the point. Like, the point of having Bitcoin in the portfolio is to diversify the portfolio and to have exposure to that market and exposure to the potential growth at the same time as trying to limit the downside and using it as a hedge against the current financial situation. Like there's all sorts of reasons to have it. So the argument that you're bad at trading it, when overall, if you look at my stats from my overall trading over the past few years, I've returned consistent profits that are higher than pretty much any hedge fund that you could have picked in the world. I'm not buying it, I'm afraid. I will defend myself. I'm going to actually big myself up for once and stop making jokes about myself. And in reality, if you go and look up some of the biggest and most successful hedge funds in the world, and you look at their average profit each year for the past 10 years, you will find that the best performing hedge funds that you would have to pay 2% per year, maybe even 3% per year, plus 20% of your profits. What? That's not what they were saying. Oh, is it not? No. Oh. I'm having a rant about nothing, Leanne said. Leanne's come to interrupt my rant. Can I continue? Can I finish my rant? Or let's misread it massively. 8% profit trades. I'll read it again now. Where did you read it anyway? You scroll up and... Yeah. And they also just commented saying, you're not the Muppet, I'm the Muppet. Oh, no. Oh, no. Right, that's it. Stream's over. I'm closing it down. Right, we're gone. Let's there you go. Stream's over. The embarrassment levels are through the roof right now. But regardless, I want to continue my rant because I do get this a reasonable amount. People saying you don't outperform Bitcoin and that Bitcoin is a fair benchmark to measure me against when I'm invested in lots of other things. Anyway, no, I'll stop because, sorry. I'm going to ignore that question because it was a bad question. That's what I've decided. Oh, man. What is going on? Just what is going on? While I'm here, I don't say this often, but follow me on Twitch, follow me on Twitter, follow me on YouTube, follow me on eToro. If you're watching this and you've been watching for the past 1.5 hours, then I'm going to go ahead and assume that you like what I'm telling you. So you should probably follow me so that I can tell you things more often. It's my little self-shilling out of the way. I'm going to read your comment properly this time. Hypothetically, that's probably the key word. You in about 8% profit on Bitcoin trades. Okay, I see. So this is a scenario. So hypothetically, you're in 8% profit on Bitcoin trades that you've opened for about 2 years. Finally come to the realization that you're a muppet and stupid for trying to trade crypto yourself. Do you close the trades right now? The answer to that question, now that I've actually read it properly, now that I've read it properly, I think it depends on how much exposure you've got, really, and what the point of investing in it was in the first place. Were you trying to trade it, or were you just investing? Because they're very different things. If you just believe in the long-term future and you want to put it aside and claim it again in 10 years and hope that it's enough to buy you a mansion, then fair play. Leave it, let it stay there. If you're happy risking that amount of money that you've invested, then go for it. If you think that the opportunity cost is too much and that money would do better somewhere else, maybe invested in the stock markets or in some nice safe bonds or copying someone on eToro, someone called Jay, then take it out or take half of it out. But basically, just assess the situation. Look at how much money you've got in terms of your investment portfolio overall, how much you're playing around with. Because even honestly, even if you only made 8% in 2 years, and Bitcoin had made 10 times that if you just held it or something, at the end of the day, if you're having fun, how much does it cost to go to the cinema? How much time, what's the value you're getting from it, right? Like when I look at things like how much I spend on pay to win mobile games, for example, there's a game that I play called Brawl Stars, right? And I've spent £150 on that game. You know, that's a lot of money to spend on a mobile game. But then I look at the number of hours I've played on it, and yeah, I only play one game at a time, and each game is like a minute long or something. But I've spent, you know, hundreds of hours on that stupid game, and it's entertaining. And I think, well, if I went to the cinema, I'd be spending £15 to spend 2 hours watching a film. So, you know, times that by 10, there you go. It's actually great value for money. And you can do the same with trading. You can literally just treat it as fun if you really want to. If you actually genuinely get enjoyment out of doing it, then consider it that and just pay money. Lose money. Even if you lose money, it's going to still be worth trading because it's a fun thing to do, right? Like, that's the way I look at things. I mean, obviously you want to make money out of it, and obviously you could make more money elsewhere potentially. But you have to weigh up the pros and cons of everything else that it affects, right? Do you just enjoy doing it? If you enjoy doing it, then keep doing it. Good for you. That's what I say. Man, I can't believe I'm glad Leanna came in and interrupted me again. She's a much better mod than Chris. Wait, is she actually a mod? Yeah, she is a mod. Just making sure. Okay, I'm scrolling back up again, guys. Actually, that's frustrating. That is frustrating. I took profits and I added these two positions. I added these two positions because I second guessed myself on taking profits. I mean, I'm still pretty confident that the market's going to go down more, so I'm going to hold on to these TripAdvisor positions. I think. Maybe. 15.28. Yeah, I'm going to hold on to it. I think it's got more to fall. Yeah, more to fall there, I think. Beyond me, you're just a beautiful stock, and I love you. Keep going. Sorry, I know that I've kind of stopped answering questions, but I just wanted to actually stop and kind of let my brain absorb the current numbers of everything. Okay. Cloudflare bounced off its 28 resistance again. 10cent's been doing well during the Asian hours. I do check it at about 3 a.m. because you know, I'm an irresponsible adult and I'm not asleep by then. So I do keep tabs on it. I did close a position last night to take a bit of profit off the table. Peloton is an interesting one as well. I really want to get more of it, but I'm not sure about this price. The Wix position that I opened at market open is up by 1%. I'm happy with that. I was really thinking about playing Wix into earnings, and if I'm completely honest, I forgot about their earnings call. I forgot what date it was, so I didn't play it. I would have gone long if I did play it. I was pretty on the fence about if I would or not, though, if I'm completely honest. If I did, it probably would have only been one position. So, you know, I'm not going to sit here and pretend like, oh, I had this amazing call and I accidentally, you know, missed the date and got the date wrong or something. That's not really the case. But I was thinking about going along on Wix, and they did go up by 8% pre-market, so they're now up by probably about 8.5-9%, if you include the pre-market from their earnings. They raised their guidance. I haven't listened to the earnings call yet, but it sounds like it's good stuff coming from them. Wix is who I use for my website, actually. Yeah, they've added a lot of stuff recently. You can do all sorts of things on Wix now. That's pretty cool. Other stuff, Guild, yeah, we're just kind of holding on to you for the dividends. And who knows, maybe you'll make something useful for the coronavirus. That would be a bonus. Instead, markets are closed now. Looking at the time, my short on these guys a bit risky. I also opened a short on Rightmove UK. Again, a bit out of my comfort zone, a bit risky, but you know, I need some good hedges that aren't just indices, and I think they may struggle a bit. I mean, they're doing things like virtual viewings and stuff for houses and whatever, but I just think the housing market is going to be affected sooner or later, and I think maybe opening a short here. I looked at their price history and stuff, and I just thought, you know what, I'm going to give it a go. Like, if you look at how high this is, I know that it's kind of following the FTSE 100, but I think we're going to be starting that next leg down. I think this is a pretty safe bet to be impacted by that. There could be some extra news coming out around the housing market that doesn't help. So yeah, I've opened short with them as well. Anyway, back to questions. Back to the questions. I'm a bit hyperactive today, aren't I? Any of you who speak to me regularly knows that this is just my constant state. But I thought I'd kind of explain a little bit of what my eyes were picking out from my portfolio as I was scrolling through it. More questions. How confident are you in Q2 and Q3? Do you think volatility will continue for a long time? In brackets, stocks and crypto. That's from Hybrids TW. Hybrids even. I'm not very confident at all in Q2 and Q3 for the stock market, to be honest. I think Q2 especially is going to be really painful. That's when we're actually going to see how badly companies were hit by this. Q1, realistically, China was the only country properly affected by this in Q1. It was only towards the end of that quarter, really, that the rest of the world started to get impacted by it. So Q2 is when you're going to really see the actual impact on the sales numbers for companies. Yeah, so that's I think that's where you're going to see things kind of coming through. There's also more time for the actual financials of the companies to really kind of get put under pressure and stuff. There are a lot of companies putting out corporate bonds at the moment, trying to raise some extra funds. And obviously, with so many out there, there's only the competition is pretty fierce, and actually the interest rates are pretty poor on them, a lot of them. So that's that could play an impact as well. You could see some companies actually struggling a little bit financially, and maybe having to do put out some extra shares or something else to try and raise funds. You're also going to get a better kind of picture on the employment numbers in terms of like the number of people working for these different companies, and see what's going on there. There could be some pretty substantial job losses in some companies, so that's important to keep an eye on. And of course, there could just be kind of an evolution of trends, right? Like we could actually see some proper trends setting in. So if you listen to certain companies, they feel like a lot of the sales have kind of hit them in one go, and that actually they're going to suffer in the longer term a little bit more, specifically with food companies, supermarkets, things like that, right? So supermarkets will have seen loads of people going out and bulk buying, and not just supermarkets, all sorts of other things like even pet food or whatever, just toilet paper, all of these like things that people generally buy for their house, right? People have gone out, bought it in bulk, and then potentially they're now not going to be going to the shops as regularly, and they're going to keep doing bulk things, which makes the sales much more lumpy, as they like to call it in earnings calls. It's going to be more lumpy sales, and that's that in itself can cause a lot of problems for a company, especially companies that are international. So yeah, Q2 is going to be bad for sure for companies. Q3 may not be as bad. I think it's a bit early to say what's going to happen in Q3. There could be all sorts of stimulus things by then. There could be recessions. There could be a second wave of coronavirus. Like, your guess is as good as mine. So this is why I say that the sell in May and stay away thing has got a lot of merit, because Q2 looks bad and Q3 looks like a giant question mark, as far as I'm concerned, for most companies, not every company, but for most companies and the markets overall. So, especially at current valuations as well. I mean, we've basically had a V shape. If you're in a tech stock, then you're probably pretty much at the same price that we were at in December. After all of this has happened, you're in the same price that you're at in December. Do you really want to be buying a stock at that kind of valuation? I'm not too sure. In terms of crypto, crypto's a bit more tricky. I think it really depends how much it acts as a hedge against, inflation and government stimulus packages of varying forms, central bank policy. If it acts as a good hedge, then we could actually see it turn pretty bullish. And there's some hints that might be what happens. But I think the most likely scenario really for crypto is that we're going to be pretty sideways and actually have a similar period to what we had after every other halving. So yeah, I would say pretty neutral. I think it's potentially some good trading opportunities. It might settle into some good channels. It's it's the thing that I think there's more trading opportunities around potentially. But we will see. I think it's really early to call it either way, to be honest. Did heard something about Sony earnings report released today. Seems going down against expectations. Yeah, I mean, the problem with Sony, I really like Sony, but Sony is its own worst enemy in so many ways because they just make so many things, and it means that inevitably they fail in some of those markets. And how splitting your R&D costs and everything across all of these different sectors, I just think is difficult. Like mobile phones, TVs, cameras, games consoles, like you name it, they make it. And I just don't. I would really like, and not to mention, obviously, all of the content side of things as well. And they've been so slow at adapting to the changing landscape of content. I imagine the film side of things is what's actually costing them a lot of money in their earnings. That would be what would stop me from buying them. I imagine they've lost huge amounts of revenue on films that they've produced and wanted to release in the cinema, and now they're in a weird situation of maybe putting it on Netflix or something else, or doing it through Sky and cable networks as like a premiere. But yeah, that side of the company is going to be hurting them for sure. Likewise, music as well. They've been slow acting on that. I genuinely believe that Sony could have made a subscription service for all of their films and TV and stuff and competed with Netflix if they went early enough, but they didn't. That was a missed opportunity, I think, and I think they might be too late to do it now. What with Disney Plus and Apple TV and Netflix and Amazon Prime, there's just so many of them now to try and dig out a market in there would be difficult. The actual hardware side of things, I think they're good at. I think they're nailing cameras. The PS5 looks good. It's still up in the air in which is going to be better, I think, but PS5 does look good. But profit margins on the consoles are actually pretty low. It's mainly the game sales and stuff and publisher deals that will make money for them. Yeah, no, I just don't think they're worth the risk at the moment. I would love to invest in Sony, but I don't think they're worth the risk. There's just a lot of uncertainty there, and I think they're spread too thin. I'd like to see them do what Nadella did with Microsoft and just kind of streamline things a bit. Coming 2 weeks ago, invested, really happy. Any earnings looking forward to? I think I answered that earlier, so I'll skip over that one. Let's scroll down. Let's see what the chat's talking about now. There's more questions coming in. What a sexy pose. Oh, man. And now I've lost where I was. Okay, there's the Sony question. Is there still an opportunity companies still in line to do well with growth from working from home, apart from Zoom? Maybe if you can think of some. I think actually the wave 2 is going to be interesting. If a second wave of coronavirus happens, then I think that actually is the kind of thing that will make people that were thinking. So for example, I'm thinking about like Peloton and about gyms here, right? So wave 2 comes along. All the people that were like, oh well, I can't go to the gym for a bit. Never mind, I bought some dumbbells and I'll maybe do some press ups, right? You kind of have that crowd, or the crowd that just decides that they're going to go out for a run, right? But I think if a wave 2 hits and they start thinking, I'm not going to be able to go to the gym for another 6 months or another year, then there may be opportunities there, right? Both in shorting the gyms, because things look pretty shaky for them at that point, right? Because there's going to be a lot of people that transition into exercising at home instead. Maybe they buy their own equipment or whatever, and potentially more opportunity for something like Peloton, and maybe others in that industry. I think those are the sort of things you've got to look for, like the things where people become used to being at home, right? So anyone who's working at their home at the moment, they've already got themselves a webcam from Logitech and upgraded their setup and bought themselves a desk and all of those things. If they're the type of person to do it, bought a new laptop, etc. The trend after that, I think, more becomes about the more luxury items to have at home, to have in your home office, right? So maybe people are going to be buying more speakers and entertainment systems. And it's more about like the long-term effects. If people are going to stay in their home, what are the luxuries that they're going to be going for? So that's what I'm thinking would be the trend to look out for. In terms of companies, I don't know. I'd have to think about it more. But that's where my head would be at in terms of thinking along those lines. But it's an interesting thing to think about, though. Why am I shorting more Germany than the UK? Because the DAX 30 is only 30 stocks, and a lot of those stocks are really like industrial in Germany, and whereas the UK is much more like financial heavy and things like that. So I think the German market is likely actually to perform a little bit worse in terms of the DAX 30 versus the FTSE 100. Because I think the banks should generally be okay-ish overall, whereas car companies will not be okay-ish. They will really struggle, especially the likes of Renault, Nissan, a few others, BMW potentially. Not so much BMW, but it's still not great for them. Yeah. Luther 82. I think a lot of companies will go bankrupt in this crisis. I'm confused. Are these comments coming from eToro? Blah blah. Skip through Leanne and Chris just hanging out. I love them actually. I'm really afraid they'll go away. It's clearly Jane. Sigh. Yep, Homo Deus, great book. Haven't read it yet though. Talking about Wesley. What's the Africa solar power thing? That sounds interesting. Try to remember the website, Jay. What's the website called? Should really remember it since I've got money invested there, shouldn't I? Oh, what's it called though? I don't know. I'll look it up. If you're in my Discord, or if you're not in my Discord, join my Discord and poke me in there after the stream, and I'll go and dig it out for you and tell you what it's called. But it's like a kind of like a crowdfunder type thing. So there's companies that are pretty well established over in Africa. Obviously, they're quite risky investments, but yeah, they're investing in like localized solar. Not just that, they do all sorts of different things out there. Not just like solar and energy stuff, but other things as well. Even things like recycling stuff. But generally, it's all like kind of environmental focused stuff. It's pretty cool. That website, and you can do it for like as little as $100, I think, is the minimum. I got Jay, George, and Wesley. It's going to be a solid portfolio. Watch Planet of the Humans. I've watched Planet of the Humans. It is full of misinformation. Full of it. In fact, I'm so glad you brought this up. Angfro, I assume you brought it up while I was talking about solar energy and stuff. So if they had made that documentary just about biofuels, they would have had a really good documentary that's exposing a lot of corruption and a lot of misinformation about what biofuels really are and how they really work. Their numbers on solar are laughable, and wind. The stats they're giving are in some cases over 10 years old. Right? There's one point where they're interviewing someone from a solar farm in the middle of, what city was it? I can't remember what city it is. There's like the solar farm about the size of a football pitch in the middle of a city, and they're asking, how much energy does this produce? And obviously, by that point, it's 10 years old. They don't tell you any of this. The footage is so the footage is 10 years old, and the actual panels have been there for at least 5 years before they'd filmed it as well. So they'd already depreciated a bit and kind of lost their initial kind of advantage, and they were working at something like 80% of their original efficiency. But so they were really, really early panels to begin with, and the answer he gave, I think, was that they generate something around 64 kilowatt hours per day, which is enough to power 5 to 10 houses on average in America, I think they said. So 64 kilowatt hours for a commercial installation, not a residential one, but a scale installation, is just for something the size of a football pitch is laughable in today's comparisons. And I'm going to demonstrate just how much you should entirely disregard anything from that documentary just because of that one part. The fact that they even dared to put something so outrageously false inside that documentary. And I'm going to demonstrate just how false in a second. The fact that they did that should tell you everything you need to know about just disregarding everything else that was in that documentary as being complete and utter lies. Absolute lies. There's no other way of putting it, right? So remember that number that I said, right? 64 kilowatt hours per day, right? This is how much my roof has generated so far today. 25 kilowatt hours so far today, right? And there's still a bit of sunlight out there. It's not a particularly sunny day today. It's sunny, right? But we're not even in the middle of summer, right? So if I've got 12 panels on my roof generating half, almost, probably half by the time the day is over, half of what a football field of solar panels is doing, you know that someone's lying, right? And it's not me. That documentary drove me insane. And the lies for wind are just as bad, if not worse. Documentary is full of misinformation. If you want to go and get angry about it, sure, go watch it on YouTube. Planet of the Humans. They make all sorts of ludicrous claims around population as well that are also not true. It's such a shame because the stuff that they did on the biofuel stuff is actually there's some truth to it. Even there, they exaggerated a lot of things. Like, the US is pretty bad for it, right? And some countries around the rest of the world, but most countries are not just chopping down forests to put them into these incinerators. But the US is doing that, and a lot of other countries are doing that as well, unfortunately. Most people are actually burning proper biofuels, so just waste biological products, right? Garden waste and things like that. But yeah, that documentary made me very, very angry. You can probably, I'm sure if I scroll down to the comments, you're going to be going like ballistic at me right now. Yeah, reading old chat. But yeah, so that's my opinion on that documentary. Pretty clearly full of shit. I am catching up slowly, guys. I'm getting there. I've totally lost my place. We're scrolling back down. Did see a question somewhere about Beyond Meat, but I've lost it again. I'm still trying to convince people my name's not Jane. Yeah, that's the constant battle I face. My Ford trades, yeah, I closed them just because the market was going against me. It's not really so much against Ford, but I just don't think now is the right timing for it. I do think that Ford are going to do well, though. To be honest, I think they're going to recover quite a bit over the coming 1 to 2 years. I was tempted to keep one position, but I decided to get rid of it as well. Regarding adding funds to your accounts, I have added more funds to your copy without copying open positions. Cool. There's the Africa thing. I'm all over the place in this chat. There's the there's the comment about the solar documentary. I understand why you have chat appearing on the screen for your YouTube uploads, but it is obscuring what you're showing us. Yeah, I know. I set it up quite late. I will fix it for next time. I'm really sorry. I set it up really late. I mean, like, the color orange isn't going to be helping anyone's eyes that's trying to read it on YouTube anyway. And also, it's quite far behind on YouTube. So right now, I'm reading old chat that isn't even displayed on the screen for them. So in some ways, it's kind of pointless, to be honest. I might actually just do better to put like a box showing the chat window as I'm scrolling through it instead. That might actually make more sense for future videos, but I'll figure it out eventually. Sorry about that. Why the Garmin positions? Surely there is nothing there. Surely there is nothing there. Not sure what you mean by that, but I'll talk about Garmin. I'll play ball. Let's find my Garmin trades. I've only got a couple of them. They are in the red. I've been holding on to them for a while. They should have had some dividends by now, and they have. Nothing all that exciting, but hey, every little helps. So Garmin is an interesting one during this period, right? I like Garmin generally, and I'm generally bullish on their products. But unfortunately, they do cater to the like leisure boat and leisure plane industry specifically quite a lot. That's a sizable chunk of what they do is make equipment for boats and planes, like GPS equipment and things. And obviously, there aren't many people going out enjoying their boats and planes right now. So that side of the business is going to suffer, and I think that's why they haven't really, made any kind of gains against the S&P 500. But I do think that they're overall a good company, and I think their wearables are really good. And actually, I think that their wearables and some of their other products surrounding wearables, like, for example, their scales and things like that, are likely to see a slight uptick during this time when people aren't going to gyms and stuff. People who go to gyms that don't have a wearable, for example, may end up buying a wearable to track their runs and things like that, if they're doing exercise at home or whatever. So I think there's some opportunity there, but generally I didn't really pick it up because of the coronavirus situation. I picked it up just because I like the stock generally, as kind of a long-term play. I've tried trading Garmin a lot and struggled to really accurately predict when they're going to do well and when they're not going to do well, but they have long term been doing well, and hit new all-time highs. So, and also the other thing is, they do have some advantages in terms of like supply chain compared to other wearables manufacturers because they make their own chips and stuff. So that makes things a bit easier for them. But yeah, generally, I kind of decided to take the approach of actually holding it long term properly, instead of trying to do my usual thing of trading whilst keeping exposure long term. So that's what it's doing in the portfolio. There's not much exposure to it, but I really like it as a long term company, and I think they've got good potential. And I like their products, and I think that they've got good opportunity to grow their products. Buying TACX was a great move. Like, yeah, I don't know. I just like their product portfolio generally. Ooh, my elbow just clicked. Oh, yeah. Oh, just keep thinking about that documentary now. You've brought up stirred some emotions in me. I get very angry about misinformation on renewable energy. Let's talk about Airbus and Boeing. Do we have to? Airbus and Boeing, maybe a good bet long term. Too risky to do it right now, I think, still. And generally, I don't know how I sit ethically with investing in something that really is contributing quite a lot to the problems we have with the climate and stuff. I mean, yeah, planes are necessary, right? Don't get me wrong, planes are absolutely necessary. But the amount of flights that we do are really not necessary. And I don't know, like, I would much prefer to be investing in high-speed rail and stuff, but I don't see the airline. I think the airline industry is going to take a long time to recover, to be honest. So I don't know. For me, it's not something that I'm going to be looking at, I don't think. I've seen a documentary about Airbus. That thing is amazing. I bet it's going to grow a lot in the future. Yeah, but as I said, I think it's going to have a tough year or so ahead of it before then. Seems that Greg K or something agrees with me as well. Seems to have the same sort of view as me. I'm almost caught up, guys. I'm almost caught up. Bear with me. Copies you again today. Talga resources. Graphene miners. Battery development. Looks very innovative. I may have a look at that to Valley North. I've not had a look at it at all yet, though. But if it's in batteries, then yeah, I would like more options than just Tesla. So I may have a look at that. Oh, need a stretch. Markets. My equity is slowly heading down. I am watching the markets. S&P is rallying currently. These seem to be okay still. My TripAdvisor shorts are still okay. I'm not too concerned by this. Let's see how I'm doing for the day. Break even for the day. Yeah, these five times leverage ones are the ones that are hurting me a bit here. But I think I'm pretty okay with that exposure, even if it does continue to rally. I don't see it going insane. Maybe I'll go back up to 2850 on the S&P. There's the S&P chart for you. I realised that I should probably have been on this webcam for the whole time that I was answering these questions from chat. Sorry. Why not shorting the VXX once it reaches the peak again? I'm bad at it. That's why mainly. I like trading the VIX in theory, but in reality, I'm not very good at it. So I'll stay away from it. Africa Electric, that is not the name of the company. Opinion on Ubisoft. I think generally that games companies are doing well. Thinking about it, Ubisoft's actually a pretty good one because they make a lot of kind of family-friendly content. Their games are generally pretty family-friendly. You think of like the Just Dance series and like the Rabbit game, whatever it's called, Rabbids and stuff like that. Like, yeah, they make quite a lot of kind of family-friendly stuff, Assassin's Creed and stuff, obviously for their AAA stuff. Yeah, they might be a pretty good one actually for while people are in lockdown. Probably a bit late for that move now, though. Generally speaking, though, I'm pretty bullish on gaming companies anyway. I feel like this lockdown has just reinforced gaming as a like hobby for people, and will potentially have even hooked new people onto gaming. I'm sure plenty of people will have upgraded their PCs and stuff because what else are they going to do while they're sat at home doing nothing, especially kids. Yeah, so it's an interesting one. I haven't really looked at the price or anything, but yeah, I like Ubisoft as a company, and actually Ubisoft has got the advantage of being French on the French markets. I think, yeah, ubi.pa, so they're on the Paris exchange, so that's kind of nice in terms of diversification as well, as a little bonus of maybe having slightly less correlation with some of the other things you could choose from. Where is Jay reading the questions from on eToro? I can't see the same questions as him for the last 10 minutes. Yeah, I'm reading them from chat, that's why. As Tio has correctly responded to you. Good to hear your knowledge on that, Jay. Planet of the Humans, thanks. We've had a bit of a chat on LinkedIn about it. Would have been good to have you there. Glad your roof is so efficient. Thank you. I can't remember what panels we went for. We didn't even actually get the panels that we wanted. I think we wanted some 400 watt panels, and we only ended up getting 330 watt panels, or something like that. So it's not even as efficient as we wanted it to be. And also, just to add more fuel onto that fire, right? When you're setting up a solar array, you're probably going to point it in the correct direction at the correct angle and everything like that. Ours is entirely the wrong angle, entirely the wrong direction. It's facing west, not south. It is almost exactly west, actually. It is about a 20-degree angle, whereas I think around 40 degrees is what you need ideally. There is just, that documentary is just so outrageous. Like, it's actually outrageous when you think about that. Like, they're saying that a football field's worth of solar panels is doing that. And the other big lie that they talk about is the amount of energy it takes to create solar panels and wind turbines compared to how much energy they generate. Generally speaking, most solar panels and wind turbines they will offset the amount of carbon used in producing them within about 1 to 2 years. 1 to 2 years. Everything after that is profit in terms of like carbon effect. So it's just complete rubbish. And that's including the supply chain and everything. And if you look at companies like Ørsted that I'm invested in for the wind stuff, they're working on all sorts of stuff to try and make sure that their supply chain and the maintenance vehicles they use to go out and do the ones at sea and all of this stuff, they're doing all sorts of work to try and reduce the carbon footprint of that as well, even though, as I said, it will pay for it within a few years anyway. And the bigger the project, the more quickly it will pay for it because of like the economies of scale, essentially. It's just it's absolute rubbish. That documentary, absolute rubbish. what do you think? Gold will reach 10. What? I'm sorry. Is this real life? $10,000. Is gold going to reach $10,000? No. Honestly, I don't think it will reach $10,000 in our lifetime. I really don't. I do think that gold has got a bull run coming. But I mean, that's a ludicrous number. You've been watching too many of those YouTube channels with the gold bulls on it that will tell you that gold is the solution to everything. Gold is not the solution to everything. People don't think that way. People like to diversify. Gold is not going to replace money. It's no longer actually a very good store of value, really. They're digging plenty of it up from the earth every year, so. And the vast majority of the value in gold as well is speculation as well. So people who tell you that it's like a proper safe haven, talking rubbish really is. Same as Bitcoin, yes, technically they're safe havens, right? But it's still speculation that leads to them becoming those safe havens. So, take it with a pinch of salt. Is Beyond Meat more about the brand than the R&D advantage or another USP? No, I think the R&D advantage is very real, actually. Very real. And I think actually the diversification thing comes into it a lot as well. You get everyone under the sun about a year ago was saying Tyson Foods, you should invest in Tyson Foods. Talking about how Tyson Foods is going to smash Beyond Meat, and Beyond Meat is rubbish, and why would you invest in that when you can invest in Tyson? They've got so much more money and so much more influence, and they're going to wipe the floor with them. And then you look at this coronavirus, and Tyson Foods had their earnings the other day, and they absolutely plummeted, whereas Beyond Meat had their earnings at a similar time, actually, and they went entirely the opposite direction. They went up dramatically. And the reason for that is because of the supply chain issues, and because Beyond Meat is focused on that one sector, and it does that one sector well, whereas Tyson Foods has got all of these other risk factors because they produce all of these other products, and they had all sorts of issues, as you've probably heard about with the supply chain in meat and dairy. Beyond Meat's actual advantage in terms of products, I'm still yet personally, and I know this is anecdotal, but personally, I'm still yet to find anything that really beats their products for the most part. And I'm in the UK, where most of Beyond Meat's products are not even available yet. They just released some new products over in the US, I believe yesterday. They released some new sausage meat products that look really good. See you later, Tio. Thanks for joining. They released some new sausage meat products, like some spicy ones and stuff. Like they've got Italian sausage products and all of these sorts of things over in America that will eventually make their way over to Europe and to Asia as well. The other thing to think about is the partnerships that they're building with some of the really big takeaway chains and restaurant chains. The recent announcements with McDonald's in China and KFC. The list goes on Subway, Dunkin' Donuts. There's absolutely loads of them. They've just got such a massive advantage, and the branding is a massive part of that. But the taste and the products, specifically like the lack of what's it called? I've forgotten the word. The word has slipped from me. But essentially, how healthy their product is compared to the competitors. They're not having soy-based products, all of these sorts of things work massively in their favor when comparing to their competitors. And there are other pea protein products around now on things, but they really, if you've tried them, they really don't compare. Cholesterol is more against traditional meat, but I'm talking about against meat alternatives. And it began with an S, but I've forgotten it. It doesn't matter what it is. It doesn't matter what the word is. But yeah, there's not many things that are really doing it well yet. And there will be some in some sectors, but I think the areas that they have the advantage, right, is in burgers and hot dogs. And I think on the sausage side of things, they're going to see more competition, especially in Europe. But again, It's hard to say because I haven't personally tried their products, their sausage products that they've got available in America, and I know they've got a lot more over there. So yeah, I think the advantage they have is very real. The brand is definitely their big selling point, though. They are like Tesla, right? The brand does the marketing for them, and that's a big deal. And the deals they're getting with restaurants and stuff is huge as well. So yeah, I'm still very, very bullish on them. That's not to say that there won't be other good products out there, but yeah, those sausages are really good actually as well. Impossible Foods, I'm not as bullish on, to be honest. I know the problem I have is that I lack the anecdotal evidence. I know, as I said, I know it's anecdotal, right? But trying the products yourself, I have tried Impossible Burgers and things, and I didn't think they were that great. To be honest, they were okay. But I think Beyond Meat is much more powerful brand, and that their products are better than Impossible currently. So I would probably just stick to Beyond. Health technology. Could you be a little bit more specific, Mark? I would be happy to answer a question on it if it was a little bit more specific, but generally, health isn't a sector that I really trade in and look at very much, so I'm not sure how much I'm going to be able to help you. I'm probably going to close off the stream soon because it's been about 2 hours now, and questions are drying up a bit. What's your opinion on IOTA? Do you think it has potential in the future? I've always thought that IOTA has potential, but I also think that it's incredibly risky. I haven't really dug into it that much recently, so I missed some in the chat. Did I? What is the highest amount someone copies you with? Ooh, it's in the hundreds of thousands, I think. As in, like, I think it's not in the millions. There might be someone with 1 million, I don't know. But eToro doesn't really share that information with me directly, so I only know when people tell me.
Do you exercise, Jamie, and how? You missed the bit after Beyond Meat R&D.
I missed a bit after Beyond Meat R&D.
You skipped to the most recent.
Yeah, I saw the exercise one, but it's kind of pointless. I've just answered the IOTA one. What's the other one? What's the favorite what stock?
European stock.
Favorite European stock? Probably Ørsted at the moment. I think Ørsted.
What do you think about Boris Johnson?
What do I think about Boris Johnson? Who's asking these questions? They sound like troll questions. How did I miss these? Anyway, I'll answer the last question that you've written. I've answered the IOTA one. Not asking questions about exercise because I don't. I do exercise. I'm not going to go through my fucking what exercises I do. I have some dumbbells and a weight bench upstairs. I have a bike that I've not used in a very long period of time. Leanne's laughing at me. Exercising pointless. That's not a serious question. I'm sorry. Are you doing stairs? I did stop doing the stairs actually. I said that I was going to run up the stairs. I did more than one day. I did 3 days. Thank you very much. How dare you? And then I just forgot. Leanne's calling me out. What do you think of Volkswagen long term? Yeah, I think VW is like VW and Ford are both in the same sort of situation, right? I would love to go long on both of them, but I think the current economic climate just isn't right for it. But their commitment that they're showing to changing their business models, and the products that they're making look good. So yeah, I think they're good ones to invest in long term, but I think it's pretty risky to do that right now. Do you have an M-phase inverter? I see you're not holding SolarEdge. I actually have a SolarEdge inverter, not an M-phase one, on my panels. Yeah, we use SolarEdge. So I'm not holding SolarEdge at the moment just because, again, it's one of the positions that I cut because the market was looking a bit shaky. And I've only got a little bit of N-phase at the moment. I'm mainly keeping it there because it looks really nice to have 31% sitting in my portfolio. Looks really good. I'm just kidding. That's not the reason. That would be silly. Preferred chart software. Depth charts. I still don't really know what you mean by depth charts. I'm assuming you're talking about market depth, like the order books and stuff. Yeah, I use TradingView. I did answer your question earlier. Yeah, I don't really use anything for market depth anymore. I used to use it a little bit on cryptos, but I've never used it on stocks and stuff. I just don't really kind of care about that stuff too much since I invest more long term on stocks usually. Sorry, your Wi-Fi cut out. That's fine. I'll answer it again. It's fine. Yeah, I use TradingView for my general charting. I use other tools for like analysis, like Seeking Alpha, things like that. You Finance, Morningstar, things like that. So I have the premium version on Seeking Alpha. That's probably the one I use the most. I would like to use Y charts, but it's really expensive, so I don't. Y charts is really, really good. For like economic stuff, especially. I'd like, let's see, what else do I use? I mean, I use some spreadsheets. Occasionally I reference hypercharts.co. I don't have premium with them. They're quite a new little website anyway. Yeah, that's about it really. What do I think of silver's potential? I don't know. I mean, mainly I'm holding silver as a hedge. So, it's not so much that I think it's really going to perform super well. I just think that it's definitely going to go up. But I don't think it's going to go like, insane or anything. So, yeah, I have a bit of it through SLV down here. You can see actually this is performing pretty well, to be fair. It's up 2% in about a week, which is pretty good. But that's about it. Does TradingView have the ability to overlay multiple stocks and indices on a single chart for looking at correlation? It does, but I've never used it. And TradingView's got a lot of things, so it would take me a while to even find where to use it, which is why I don't generally do it. Actually, it's got a massive compare button right here. So it's got a huge compare button literally right here, and you just type in a symbol. Let's try it on something. Since I've never used it, let's try it on something. Let's take TripAdvisor and let's compare it with Expedia. EXP. There you go. I mean, what you'd have to do is you'd have to change this from candlesticks to line charts if you wanted to do it properly. But yeah, so there you go. You can see the correlation between the two. But I'll take that back off. Yeah. Yeah, I mean it would. Generally I prefer comparing like other metrics rather than just the price. So I look at the earnings ratio, not earnings, like, so you can look at things like earnings per share, the price to earnings ratio, price to book ratio. There was another one that I just thought of and now I've forgotten it. What's it called? I've forgotten, but I do comparisons of those things pretty often, but I don't really compare price charts very much. But yeah, you're right. I mean, it can work. It can be, it probably is a useful thing to do when you're looking at like sectors overall, but I don't really do it very much. I do it on eToro sometimes, but I've never really used TradingView for it for some reason. But now that I've just realized how incredibly easy it is to do, I'm probably going to start doing it more often. Thoughts on Zine, BHC, and MIL? Yeah, I don't really trade those stocks very much. I've traded Zinye, whatever, I don't know how to pronounce their company name, pharmaceuticals, a few times. They have they're a bit all in one though in terms of products. You know, they're really betting the house on their latest product for what was it for? I can't remember what it's for now. Epilepsy or something. I don't know. It's been a while since I've looked at it. Yeah, it's not really something that I trade, I'm afraid, so I can't really offer any advice. It wasn't a troll question about Boris. I'm interested in what British people think about him. I think Boris is a complete moron. Well, no, he's not a moron. He's very intelligent, but he plays himself off as being some sort of a buffoon. I think if you actually look at his policies and things, it's very clear that he's quite authoritarian. He loves what China is doing. He emulates Chinese strategy on all sorts of things economically and politically. He's a big fan of like the empire and stuff, and of Churchill and strong leadership and all of these sorts of things. So in terms of politics, it's pretty clear to me that he desperately wants to be as good as or as smart as the people running China, but he's quite clearly not. His policies during coronavirus have been woeful. There's huge swathes of the population that are basically just completely screwed because they didn't get furloughed and they couldn't get furloughed, or because they're self-employed and they don't quite fit into the brackets there, or don't have enough income history, and all of these sorts of things. Absolutely refuses to look at policies that even Republicans in America are looking at, like universal basic income, things like that. I mean, I guess part of that is more to do with his party politics rather than him personally, maybe. I think he's generally sexist and not necessarily racist, but certainly he is not particularly sensitive to other people's feelings. He's compared people wearing burqas to letterboxes. He has made all sorts of horrible references to women before as well. So yeah, generally speaking, as a person, I would not be his friend. Not a big fan of him. Not a big fan of his politics. I'm quite left-leaning though, so that's not too surprising. I don't know. He's a bit like Donald Trump, really. He's okay for entertainment value, but it kind of even that is tainted by the fact that you realise that actually this is real life. So, that's my view on Boris, I'm afraid. And I do have some, I actually have some Tory voters who have been following me on eToro and copying me for a really long time, and I do get on well with them. And I get on well with a few Conservative members and stuff, but that's mainly when we don't talk about politics. I think there's plenty of smart people in that camp. I just think that they don't examine the science enough on a lot of things. And I know that economics, especially, isn't particularly sciencey science, if you could call it that. It's a bit more loose and fast and loose with the rules. There is no one correct way necessarily of doing things in economics, but they just pretend that there is only one way and that it's their way. So there you go. The Conservatives, well, I mean, if they did, I think they would have acted on climate change a lot earlier. They are doing a bit more these days, but honestly, it's just because of the amount of pressure put on them in the UK by the public, to be honest, in terms of them believing in science. I think that's the only reason they do it. And they certainly don't consult the science on things like drug laws or on things like, again, universal basic income. There's so much science backing that now. It's ridiculous. Even border policy. There's a lot of science out there that they could be referring to, but they choose not to. Yeah, all sorts of things like that. I'm sure all of your followers are green. I think a lot of my followers are, but honestly, a lot of them are totally the opposite view to me. You know, I've had arguments with plenty of them on Twitter. Trust me, I've found the ones that are far right. Let's call them. And interestingly, they still seem to follow me. Quite a lot of them. Okay, I'm gonna make these the last questions. Because I think it's gone on for a pretty long time. We're approaching 2.5 hours. That seems like a good cut-off point. You mentioned that you'll be adding funds into your portfolio. Is it best to wait until next month before copying you? Good question. What you could do, since I'm going to be adding roughly 20 to 25%, I won't know the exact number because I don't know where my portfolio is going to be, but because I'm going to be adding roughly 20 to 25% of funds, what you could do is copy me with 75% of what you were going to copy me with, and then wait and add the extra 25% when I add funds in a month. And then that way you're copying me sooner rather than just waiting. What's your view on GBP going forward? I know you don't really muck around with currency, but as we UK eTorans are invested in a lot of EU USD stocks, I would like to know your perspective. Generally speaking, I think the EU is going to struggle in terms of policy and kind of keeping all the plates spinning a lot more than the UK will during the upcoming economic crisis, if you want to call it that. So I think we will outperform that. We will probably still underperform the USD, even though the US is looking like it's in a horrible situation. But the pound should perform actually pretty well, I think, overall. I mean, it really depends on how much the Tories manage to bugger it all up. We'll see, though. I think we're pretty sure to outperform the euro, though. I would think we'd really have to mess things up to underperform everything. Cool. I think that's it for questions. Thanks for tuning in again, guys. I appreciate it. I think we are actually slightly down for the day now. We're flat. We're 0.01%, 0.07% even in the green for the day currently. We were obviously up by a good amount more than that earlier on, but I think holding on to my short positions at the moment is probably wise. I'm going to hold them over the weekend and see how things go. But yeah, thanks for tuning in, everyone. I will do my best to get this uploaded to YouTube sooner rather than later. My name is not James. My name is not Jane. My name is Jay, Jay. So remember that for next time. Follow me on Twitch, on YouTube, on Twitter, and obviously on eToro, and copy me if you want to, or don't. No pressure. I don't like to pressure my copiers. So if you like my stats, copy me. If you don't like my stats, maybe think about copying me. Thanks for watching, and I'll see you guys again next time.